Wonderful good day, ladies and gentlemen, to the gold mining news on Commodity TV. China continues to make rapid progress in securing gold. The People's Bank of China is not only acquiring gold on the open market, but has now also decided that insurers can buy gold on the market for up to approximately $27 billion. 10 companies, including PICC, Property and Casualty, and China Life Insurance, two of the largest Chinese insurers, have already started. No wonder gold continues to run, because one thing is clear: gold is still the ultimate store of value and store of purchasing power. Gold is likely to fall the $3,000 very soon. We think that could happen within the next weeks. We see prices of $3,300 and then even $3,600 for an ounce of gold this year. It is therefore fitting that the still young precious metals producer Sierra Madre Gold and Silver has just presented record production figures for January 2025. The company has put the Calibre mine in Mexico back into operation, and the processing plant continues to run at a current capacity of 500 metric wet tons per day. The complex reached full commercial production on 1st January and is now delivering gold and silver concentrate on a weekly basis. In January, a total of 349.48 tons of dry concentrate were shipped and a further 45.81 tons were stockpiled. The preliminary weighted average silver grade of concentrate shipments was 2,429 grams per ton, and the average gold grade was 32.124 grams gold per ton. Super, and we are positive on the stock with an initial price target of $1.25. Revival Gold reported recent progress at its Mercur gold project in Utah in the USA. The company and its principal consultants, Respect Company LLC and Capes, Cassidy and Associates, have completed draft geomodels, grade domains, and a preliminary new block model of grades and metallurgy to support the company's planned PEA for Mercur. The aim of updating the models is to provide a more robust mineral resource estimate for optimal PEA mine planning. The updated mineral resource estimate also incorporates additional data from historical drill logs and metallurgical testing, as well as the results of column leach and metallurgical testing conducted by Revival Gold in the fall of 2024. A Whittle open pit analysis, trade-off studies, and preliminary layout planning for the site are already underway. Design of the open pit operation and waste rock stockpile, mine design, heap leach and processing plant designs, ancillary infrastructure designs, and operating and capital cost estimates are underway. The full results of the PEA are expected to be available within the next 2 months. Revival Gold is targeting gold production of approximately 80 to 100,000 ounces per annum over a mine life of 9 to 10 years. As the mineral resources at Mercur are located on private claims where dry climatic conditions prevail, Revival Gold anticipates an efficient and expeditious process under the auspices of the Utah Department of Oil, Gas and Mining once a mining permit application is filed. Revival Gold is very promising and far too cheap. We see an imminent upward reversal formation with an initial price target of $1.25. Already successful gold producer Calibre Mining announced additional results from discovery diamond core drilling from the expanded 100,000 meter drill program at the Valentine Gold Mine. Previous drilling highlights significant openings to the southwest of the Le Prechon pit in the Frank zone. The new drill results reveal near surface thick zones of continuous mineralization that extend the volume of high-grade gold intercepts to surface. These results are consistent with previously released high-grade trenching and sampling data. All results discussed are well outside the known mineral resources. Highlights included over 3 grams gold per ton over 48 meters of estimated true widths, and at surface 98 grams almost over 3.9 meters estimated true widths, and 1.6 grams gold over 44 meters estimated true widths. In addition, there was almost 2 grams gold over 36 meters and 1.25 grams gold over 19 meters estimated true widths, as well as several other very good drill intercepts. Darren Hall, president and CEO of Calibre, commented, "Follow-up discovery drilling at the Frank zone, located 1 kilometer southwest of the reported mineral resources, continues to return wide intercepts of gold mineralization. Importantly, drilling has now traced mineralization to surface, highlighting the potential for a further open pit. These new intercepts are geologically coincident with ore from the Marathon, Berry and Le Prechon open pits. While exploration of the Frank zone is still in the early stages, current data indicates that the zone remains open to the southwest and north and has now been traced over 1 kilometer along strike and to a depth of approximately 500 meters. Historically, drilling at Valentine has focused primarily on the 8-kilometer section between Le Prechon and the Marathon pit along the Valentine Lake Shear Zone. This 32-kilometer long structure remains highly prospective for the discovery of additional gold resources and represents only a small portion of the 250 square kilometer land package. With construction progressing on schedule, Valentine remains on track to produce first gold in the second quarter of this year and turn Calibre into a mid-tier gold producer with annual production of 450,000 to 500,000 ounces, Darren Hall said. We fully agree with this. The share has now reached our first price target of $3 Canadian. Fantastic. The next target is now $6 Canadian. This is what the chart is saying. You can also find all the information on our commodity TV app in German and English, as well as everything to do with commodities. Please note the disclaimer. The shares discussed are or will be part of the SRC Mining Special Situation Certificate, and I am or will be a shareholder in the companies. Thanks for watching us, and bye-bye from Switzerland.